Welcome to Selftax YouTube channel. If you're an expat, business owner, or landlord and you're not subscribed yet, this channel is for you. We break down tax rules, deadlines, and changes clearly and simply. Hit subscribe and stay compliant, without the stress. One of the most common questions people ask about MTD for income tax is simple. What exactly do I need to record? Because knowing you need digital records is one thing. Knowing precisely what those records must contain is another. In this video I am going to go through exactly what HMRC expects you to keep, how to organize it, and the practical habits that make the whole process straightforward. Under self-assessment, HMRC did not specify exactly how you kept your records as long as you could produce them if asked. Under MTD for income tax, the requirement is more specific. HMRC says you must keep digital records using software that is compatible with MTD. The reason is that your quarterly updates are generated directly from those records. If your records are incomplete or disorganized, your quarterly update will reflect that. So the quality of your records feeds directly into the quality of what you submit. For self-employed individuals, HMRC sets out specific categories of information that must be recorded digitally. You need to record your business income, meaning the money coming into your business from your trade or profession. You need to record your allowable business expenses, broken down by category rather than as a single total. You also need to record the date of each transaction and a description that makes it clear what the income or expense relates to. HMRC does not require you to scan every receipt, but you do need the details of each transaction recorded digitally in your software. For landlords with property income, the digital records requirement covers similar ground. You need to record your rental income for each property, including the date received. You need to record your allowable property expenses, again categorized rather than combined into one figure. If you have multiple properties, the records need to reflect each property separately rather than lumped together. HMRC's guidance makes clear that property income and self-employment income must be recorded separately if you have both, even within the same software. One area where people make mistakes is recording all their expenses as one figure. HMRC expects expenses to be categorized. For self-employment, common categories include office costs, travel and subsistence, stock and materials, advertising and marketing, phone and internet, professional fees, and financial costs. For property, common categories include repairs and maintenance, letting agent fees, insurance, mortgage interest, and utility costs where applicable. Your MTD-compatible software will typically have these categories built in, so it is more about making sure each transaction is assigned to the right category rather than creating the structure yourself. This is worth clarifying because it reassures a lot of people. You do not need to submit your receipts to HMRC as part of your quarterly update. You do not need to upload invoices or bank statements. What you submit is a summary of your income and expenses for the quarter, generated from your digital records. HMRC may ask to see the underlying records if there is ever an inquiry, which is why keeping them organized matters. But the submission itself is a summary, not a document upload exercise. Keeping records digitally does not mean you can delete them after you submit. HMRC says you must keep your records for at least 5 years after the 31st of January submission deadline for that tax year. For the 2026 to 2027 tax year, that means keeping records until at least January 2033. Most MTD-compatible software stores records within the platform, but it is worth understanding your software's data retention policy and whether you have a backup process in place. One of the most practical tools available in most MTD-compatible software is the bank feed. A bank feed connects your business bank account directly to your software, automatically importing transactions as they happen. This removes the need to manually enter each income or expense item. You still need to review and categorize each transaction, but the data entry step is largely automated. For anyone who has struggled with keeping records up to date, setting up a bank feed from the start of your MTD journey is one of the simplest ways to stay organized throughout the year. If your digital records are incomplete when a quarterly deadline arrives, your options are limited. You can submit the update with the information you have and correct it later, but corrections create additional work and potential inconsistencies in your figures. A better approach is to treat the end of each month as a mini records review. Spending a short amount of time each month checking that all transactions are recorded and categorized means the end of each quarter is a review, not a rescue operation. That monthly habit is genuinely the most practical defense against incomplete records at submission time. Not all accounting software is the same, and choosing the right one for your situation makes record keeping significantly easier. When evaluating MTD-compatible software, look for bank feed connectivity, expense categorization that matches HMRC's categories, clear quarterly update submission functionality, and the ability to separate property and self-employment income if you have both. HMRC's website lists all software that are compatible with MTD for income tax, and that list is the right starting point. Free options can work well for straightforward situations. More complex income sources may benefit from paid software with additional features. So what digital records do you actually need to keep under MTD for income tax? Your business income and allowable expenses, categorized and dated, recorded digitally in MTD-compatible software. For property income, the same approach but separated by property and kept distinct from any self-employment records. Receipts and invoices do not get submitted but must be retained for at least 5 years. And building a monthly review habit makes every quarterly submission significantly more manageable. The records are not complicated. The habit of keeping them current is where the real work is. Next up, how the MTD points-based penalty system works and exactly what triggers a financial penalty. Thanks for watching. Subscribe to Selftax for clear practical UK tax guidance. Stay informed, stay compliant, and stay one step ahead of HMRC.